Guys, last week I was very much clear and very much confident that the S&P 500 and the entire US stock market will go bearish. It will fall, it will give a good fall. And this was supposed to begin from Monday, Tuesday onwards. However, we have seen that on Monday and Tuesday, the S&P 500 did not work as per our expectations. However, I was pretty much confident and I stuck to my technical analysis that no matter what, any reversal, whatever may come, it will be limited and then there will be a fall. There will be a fall no matter what. A good fall will be there. And this was the previous S&P 500 weekly technical analysis. It was very much clear that no matter how high it goes, no matter what the levels it is going to break, eventually it will realign itself to the bearish side, all because of this particular candle that was formed on October 13th. And one more thing, that the fall will come and a heavy fall will come. It was confirmed on Wednesday itself. Wednesday was October 18th. Because of the closing of the Dow Jones, this is the chart of Dow Jones below the moving average. So now the Dow Jones has closed below the moving average. Moving averages are bearish, and also the S&P 500 closed in the same manner, bearish moving averages. Both of the indices closed in the same manner, means fall, fall and fall. And in my final update to my Patreon community members, the condition was mentioned that this is how it is going to work, because the closing of the Dow Jones below 34058 indicates that the market is almost done here, because this will be seen as a third successive rejection from the strong level. So that itself was sufficient. And in my pre-market update on October 19th, in this the technical analysis part, this was further confirmed that in a manner that these indices were seen bearish through the moving averages patterns. This means that now there will come more bearishness. Anyways guys, other than this, the Monday and Tuesday, everything went well as was expected, and all is well that ends well. Stay tuned and watch this entire S&P 500 weekly technical analysis, because this will help you understand what is happening, what is going to happen, what will happen in the short term and in the long term. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you are looking for these, the daily updates, the daily analysis of the S&P 500 from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I'm going to discuss the agenda of this S&P 500 weekly technical analysis, and this weekly technical analysis is applicable to the entire US stock market, S&P 500, Dow Jones, Nasdaq and their respective ETFs. And this stock market technical analysis is applicable from October 23rd, which is Monday, through October 27th, that will be Friday. Anyways guys, so the S&P 500 technical analysis, the first point of the agenda is the S&P 500 technical analysis on the weekly chart. Clearly kind of engulfing condition, engulfing on the weekly chart. Engulfing means this is not absolute engulfing, okay, but almost you can say like partial engulfing or 70% engulfing. However, this particular engulfing, okay, it will show its impact. That is why more bearishness will be there. I will clear this on the weekly chart. On the weekly chart, not in case of the S&P 500, but I think it is in the case of Dow Jones. Now finally it is changing in the long term trend. The long term trend is changing from bullish to bearish. Okay, I will show you, okay, how it is changing from bullish to bearish. For last many months, 7-8 months, okay, it was trading bullish, okay, even though there was this fall and fall, okay, but recently because of the formation of this particular last candle, okay, it has already kind of changed from bullish to bearish, and this is the long term change. Long term, where I say long term means, for example, okay, this is the Dow Jones. So in the month of March, it start to move up, okay, then it entered into this the long term okay, bullish trend. It gave up, came down, okay, then again it moved up. So this was the long term, means in the long term you will see that this will be the movement, okay, this was the bullish movement, okay, it will give you an opportunity to buy, move up, out, okay, down, enter, move up, out, okay, down, and then so now when the trend changes, now what will happen? So this the bearish movement we are saying in the long term, okay, so long term bearish movement will be like this. So that is the weekly chart outlook and all. Yes, the recession, the point number 2 of the agenda is the recession and Fed's outlook. Recently, the Federal Reserve Chairman, I think on Thursday, okay, he has confirmed that in order to bring down the inflation, the Feds are committed to keep the rates higher for longer. Okay, as of now, the target range is from 5.25 points to 5.5. Okay, 25 basis points to 550 basis points. Okay, and Feds are committed to okay, to bring down the inflation, which is why they are planning to keep these the rates, okay, here for longer. Other than that, there will be a possible rate hike. Okay, if the inflation doesn't cool down. So I will discuss this thing in detail. Then the third point of the agenda is the S&P 500 technical analysis of the daily chart. Daily chart we have clearly seen again aligned bearish, 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 clearly bearish, 100% bearish, absolute bearish. Okay. This is bear. S&P 500 is absolute bearish. However, Dow Jones needs just one more candle. Okay, small candle, green or red, doesn't matter. And then on Monday, the Dow Jones will also go absolute bearish. As of now, S&P 500 is absolute bearish. In the last point of the agenda, that is the S&P 500 probable movement from October 23rd to October 27th, I will tell you that what we are expecting. Okay, definitely more bearishness. However, it will hit the saturation and then a reversal. Okay, reversal and then again a fall. Okay, and also next week, Thursday, Friday, okay, PC data, core PC data, and the GDP data that will be published. Other than that, on Tuesday, Wednesday, Microsoft and the giants, they are going to post their earnings, and we have seen that whenever there comes any exceptional movement in the stock market, okay, against the technicals, then Goldman Sachs and Microsoft, these are the two stocks, okay, generally these two stocks gives, okay, that kind of volatility. Okay, this means that Tuesday, Wednesday, as per the performance of the Microsoft, okay, we can expect some volatility in the entire US stock market. And whatever will happen or whatever is going to happen, I will keep you updated through these the daily updates, the daily analysis of the S&P 500 from Monday through Friday. Okay, that when the S&P 500 will fall, when it will get a reversal, what will be the exact level, okay, that will keep it sustain the S&P 500, okay, help it sustain. So on Friday, okay, I mentioned this to my Patreon community members that 4 to 5, maximum 4 to 5 the fall will be there, and 95% probability chances that it will be up to 4 to 5. Okay, a breach may happen, but that is only 5%. Okay, some good fall, but that will be 5%. Otherwise 4 to 5 will be enough for the day, no more fall. Okay, and you can see that it came down to 4 to 3, just 2 points. Okay, otherwise it hit, okay, there's a level and it sustained there. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you want to get these the daily updates, the daily analysis of the S&P 500 from Monday through Friday, okay, to understand and to know from where it is going to get the reversal, where, when and where, okay, it is going to fall, what will help it to sustain, what will help it not to sustain and to give up, etc., everything from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the first point of the agenda of this S&P 500 weekly technical analysis, and in this the first point I will discuss and I will analyze the weekly chart of the S&P 500 as well as the Dow Jones, and that will give us a clear picture what is going to happen in the US stock market in the coming week, okay, everywhere in all of the indices and all. So this is the weekly chart. Let me write it down. W as in weekly chart. One candle represents 1 week, okay, not 1 day or 1 hour. One candle means 1 week. And let's first analyze the candle. It's a heavy bearish candle. The body of this candle has engulfed the body of the previous candle. However, the body of this candle has failed to engulf the entire candle. This is the previous candle. But the good thing is that this particular candle, it has engulfed the previous two weekly candles, that was for the week of 25th of September and 2nd of October. So this means that yes, the bearishness is there. Okay, fine, it is indicating a bearishness, good bearishness. Secondly, the closing of the candle was almost equal to the low of the candle, this indicates that on Monday either we are going to see a gap down open, or irrespective of any open, okay, we are going to see a bearish movement, okay, most likely in the first hour anytime, okay, the bearish movement may come. And even if there comes a gap up open, then also, okay, it will come down approximately to this level to fulfill its technical obligation. Last week on Monday we were expecting this to happen, okay, but there came an unnatural movement, okay, surprising movement, bullish movement Monday, Tuesday, but on Wednesday it came down to fulfill its technical obligation. Okay, so as such, now, okay, I hope this the candle is clear. Now if you look into the moving averages, there is still no clear confirmation, the clear crossover in the moving averages. Moving averages are still trying to cross over, okay. This means that S&P 500 is still sustaining through the moving averages. Other than that, the MACD, as mentioned last week, that on the weekly chart MACD is bearish, and stochastic RSI is also bearish. Then no matter what, okay, even if it try to move up, technicals will pull it down, okay. So still they are there, and everything, all of the technical indicators. So as of now we can say that on the weekly chart the S&P 500 is 75% bearish, okay. However, this is not the entire story, okay. This is the big picture. Let me show you the big picture. Big picture is seen through the Dow Jones, the change of trend, the change of long-term trend. So what actually is triggering this the long-term this the change, okay, this the long-term trend, that is the crossover of the moving averages. The crossover, it was not seen in the S&P 500. It might happen next week or next to next week. However, in case of the Dow Jones, the crossover is confirmed, that now because of the crossover in the moving averages, it is bearish. This means that the Dow Jones is going to come down, and because the Dow Jones is going to come down, this means that the entire US stock market will come down, okay, irrespective of what the index is, what the ETF is. Other than that, the saturation is still not there, means a technical reversal that might have come into the picture. So technical reversal is not there because the saturation is not seen, okay, or at least until Tuesday, Wednesday, okay, depends on the movement, we need to check. So the saturation is not seen, means a fall or the bearish movement is expected to continue, okay, without any problems. So in case of the Dow Jones, what we can say is that the Dow Jones is the one that is like almost 90% bearish on the weekly chart. This is the big picture of the Dow Jones. S&P 500 is 75% bearish, okay, and Dow Jones is 90%. This means that overall there is bearishness, okay, and also now the bearishness is not just in the short term but also in the long term, and the indices, okay, they are coming down. Where the S&P 500 is going to find the next support, the good support, okay, it will be the zone. This zone was approximately 4155. This is where technically, I repeat, this is where technically we are expecting that the S&P 500 will find some support. Recently we have seen that the S&P 500 has found the support at golden support level, that was 4291, okay. Now the next support after 4291 is 4155, where we can say that something like that, okay, for a few days, okay, it can means it will be coming down, then it will hold, and then it will give a kind of reversal, then again down also, okay. So this will means this is, okay, everyone, and even the Federal Reserve chairman has confirmed that everyone, even the top notch analysts, okay, they were expecting a recession in Q3, Q4. Even the Feds were expecting a recession in Q3, Q4 of 2023. However, because of the strong labor market, because that is the only factor which is not, or which has simply delayed the recession. So for now, remember one thing, recession is delayed, it is not cancelled, okay. So people who are saying, okay, go bullish and bullish, okay, and S&P 500 will hit 5000 by the end of this year, okay, so this is their point of view, okay. Even when the S&P 500 was holding here, okay, some people were saying that it will move up and it will hit 4500, or in this in the month of October, okay, 4600 in the month of October. However, as per technical analysis, as per my technical analysis and observation, I was clear that it is not going anywhere. Okay, this is just a reversal. It is not going to sustain. It will fall. Okay, it came down. So people have their different opinions. Okay, for different purposes. So recession is delayed. It is not cancelled. Clear. Fed's outlook, okay, and everyone, okay, as long as the labor market is strong, okay, the recession will not come into the picture. Once the labor market started to come down, then only we can anticipate a probable month, or probable, not week, but the probable month when the recession will actually hit, okay. Or we will see a heavy fall in the stock market, and we will see that in the economy, businesses will fire more employees, okay, and all of that, the recession thing. Anyways, so the Federal Reserve Chairman's speech, okay, it was, so he was very much clear that he has confirmed that the inflation has cooled down, it's coming down, but it's not as expected. However, looks good. Also, the cooling down of inflation is still uncertain, and Fed needs many months to confirm. Okay, when he mentioned this thing that Feds needs many months to confirm, this means that the Feds are not going to give any kind of relief to the economy, to the stock market, or to anyone, because they are still uncertain what will happen to the inflation, because the labor market is very strong, and that is causing the inflation, or that is. And other than that, recently we have seen this, the Russia Ukraine war, and now this the Middle East conflict, that is further going to push the oil prices up. Okay, increase in the oil prices means, okay, means everything will be costlier. Anyways, the Feds will further restrict the monetary policy and will keep the rates at these high levels for many months, including the chances of raising the rates. He has confirmed this thing. There will be a sustained, okay, below trend growth for some good period of time, for next 8 to 10 months, 8 to 9 months, okay, that is there. Labor market is still strong and will take time to slow down, and that's what is keeping the inflation to hold. Overall, nothing good for the stock market, but just bad. So this was my observation to my Patreon community members, that there is nothing good, okay, but just bad. And by the time I have given this the updates to my Patreon community members, we have seen that on Thursday, okay, the S&P 500, okay, it gave an unexpected bullish push. It was holding, okay. So I gave my these the comments to my Patreon community members that is bad, nothing good for the stock market, means no bullish or restricted bullish. And in my pre-market update, I have confirmed that if there comes no good result from the Federal Reserve Chairman's speech, okay, if it comes neutral or bad, in that case the entire stock market will go down. It came down, down and down, okay. So overall, I think, okay, this the picture is clear that recession is delayed, not cancelled. Feds are committed to bring the inflation down to 2%, and the labor market is the problem. Labor market is very strong, and it is creating the problem for the Feds particularly. And because of the strong labor market, people have money, people are spending the money, they are buying the things, okay. So things are slowing down, but not as per the expectations of the Feds, okay. Recently we have seen the reversal in the inflation and so on, okay, and these the things. Anyways, guys, you need not to wait for this the labor market, this data or that data, okay. If you know the technical analysis, how the technicals work, then no need to worry, no need to fear anything. So guys, I have this the program that is stock market knowledge transfer program, okay. And if you want to learn about the technicals, if you want to learn the movement, the hacks, strategies, the technical analysis, the trend, the manipulation, technicals, predictions, support and resistance levels, and much more, then you can participate in this S&P 500 or the stock market knowledge transfer program. Because the purpose of this program is to make you self reliant, so that you are not dependent on anyone, and you know what is happening, you can deduce that trend by yourself, okay. So everything you will know. So these are the levels, okay, I've defined here, and this is the Google spreadsheet, okay. The details, okay, this the detailed information is there in this the Google spreadsheet, okay. You can click and you can see, you can visit this Google spreadsheet, and the screenshots of the participants, okay, who have attended the program, okay. You can learn, okay, about that. So guys, if you have any questions that you want to ask about the program, okay, or if you want to participate in this the program, the S&P 500 or the stock market knowledge transfer program, then this is my email address. And also I have given the link in the description of the video, and also in the comment section, you can follow that link. Now guys, I'm going to discuss the third point of the agenda of this S&P 500 weekly technical analysis. And the third point of the agenda is the S&P 500 technical analysis on the daily chart. This is the daily chart. Let me write it down. D as in daily chart. Now on this the daily chart, let's first analyze the candle itself. This is a bearish candle, a good bearish candle. Okay, multiple factors here, and the closing of the candle is almost equal to the low of the candle, indicates that the bearish sentiments were there at the time of closing, and the bearish sentiments will be there, okay, on Monday when it opens. This means that either we are going to see a gap down open, okay, or irrespective of any open, some bearish movement. Now there is a problem in this the gap down open or in this the bearish movement, and the problem is created by this particular support. I will discuss this in the next point of the agenda. Okay, so there will be two conditions, yes, two conditions, okay, that can negate the impact and the effect of this, and we can see some good fall or some heavy fall. Okay, so this is about the candle, just the bearish sentiments, heavy bearish candle, okay, nothing else. Now in terms of the technicals, when we look into the technicals overall, the best part is that the moving averages are still trading, okay, and the closing, it was seen below the moving averages, confirmed closing, okay, overall bearish. And the other important part is that yes, this was there, the change in the MACD. Now MACD is bearish, stochastic RSI was already bearish, moving averages are bearish, heavily bearish. S&P 500 is heavily bearish, or we will say that S&P 500 is absolute bearish, 100% true bearish, true bearish. Fine, this means that now it will fall, or any reversal will be seen as an opportunity to go bearish, and then fine, okay, like this. Reversals generally we can expect when the giants are Apple, Microsoft, Amazon, Google, Nvidia, okay, these 4 5 giants. Okay, and guys, there is one more thing, that when the recession will strike, okay, it will be the Nasdaq that will pay heavily, Nasdaq, and the ETF of the Nasdaq is QQQ. This particular index is going to suffer the most. Okay, then comes the S&P 500, then it will suffer heavily. The least that is going to suffer, okay, it will be the Dow Jones. Okay, the reason is that in the recent months, okay, in recent months, also in last 2 3 years, okay, after this the pandemic, there was extremely heavy growth in the tech stocks, okay, tech stocks. And here the problem is that the S&P 500, the top 5 or 6 constituents of the S&P 500 are the tech stocks: Apple, Microsoft, okay, these companies. And Nasdaq, okay, it is purely tech. Okay, that is why, because there was heavy bullish movement in Amazon, Microsoft, all of these the tech stocks, Nvidia. That is why Nasdaq, it moved up heavily. Now is the time for the payback. Okay, so Nasdaq will suffer the most, and Nasdaq will suffer heavily. Nasdaq QQQ, they will suffer heavily. And S&P 500, yes, it will also suffer heavily. Okay, because recently we have seen, okay, this was the S&P 500 because of the tech stocks. Okay, so this it has to come down. Okay, it will be trading back into 3xxx. Okay, and if all goes well, then 3505 will be the level it is going to hit, okay, in next 1 year or 1.5 years, or you can say 3505. Anyways guys, I will explain this thing, okay, in more detail in the coming weeks. But until then, if you want to trade safely, if you want to get these the daily updates, the daily analysis of the S&P 500 from Monday through Friday, and it's not just about the daily S&P 500 updates that I gave, but I also analyze the premium stocks of the US stock market, like Microsoft, the United Health, okay, Disney, Airbnb, Walmart, Amazon, Apple, okay, all of these are premium top-notch stocks, premium stocks, okay. And in order to join my Patreon community, I have given the link in the description of the video and also in the comment section. When you follow that link, then you will see that this is my Patreon page, this is my Patreon profile. And on this the Patreon page, you will see that there are these 2 levels. Okay, so as such, there is no difference in these the 2 levels other than the geographical location. This one is for non-US Canada residents, this one is for US and Canada residents only. So when you subscribe to either of these, then you will see that You will get the daily S&P 500 updates from Monday through Friday, as well as the stock market opportunities every week, minimum 5 to 10 in the premium stocks of the US stock market. And you will see that many people have joined my Patreon community for last many days, weeks and months, and they are getting these the daily S&P 500 updates and the daily analysis of the S&P 500 from Monday through Friday, as well as the stock market opportunities in the premium stocks of the US stock market. So whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community, and you will be getting the daily S&P 500 updates from Monday through Friday, as well as the stock market opportunities in the premium stocks. Now guys, I am going to discuss the fourth and the last point of the agenda of this S&P 500 weekly technical analysis. And in this the last point of the agenda, I am going to discuss the probable movement of the S&P 500 and the entire US stock market for the coming week, that is from October 23rd, which is Monday, through October 27th, that will be Friday. So let's discuss what is going to happen in the entire US stock market next week. um, Before this, the probable movement, okay, a few things that you must understand. Number one is Tuesday, Microsoft and Google, they are going to post the earnings. I think it will be after market hours. Okay, after the market is closed on Tuesday. So whatever the earnings will be there, okay, in the Microsoft and Google, okay, its impact will be seen on Wednesday morning. Okay, Wednesday morning, particularly in the open. Either there will be a gap up open or gap down open. Okay, or there is one more thing, that if the S&P 500 continues to come down on Monday and Tuesday, okay, and Monday and Tuesday, okay, it closes as red, and if the Microsoft and Google, okay, post better than expected earnings on Tuesday, okay, in that case, this the red candle, it won't be able to give more fall. Rather, we will see, okay, a reversal, a bullish reversal, and this can further be seen, okay, if the technicals, okay, if they are saturated. Okay, as of now technicals have started to saturate, but it is too early. Okay, this means we need, okay, at least 1 or 2 days. So this means that everything will fall in line. Okay, everything will be, okay, as expected. Okay, means it will simply create a perfect ground for a reversal. Okay, a good reversal, where the reversal will be heading to the 200-day EMA. Okay, as simple as that. Before that, it will be, okay, this is the low. So Tuesday is clear. Number two is Thursday, the GDP data will be published. Okay, this will further make the markets volatile. And Thursday, after market hours, I think, after market hours, okay, Amazon is going to post its earning. Amazon. Okay, this means that Thursday and Thursday and Friday will be volatile. And one more thing, that, okay, Friday. So Friday, it will be the core PCE data and the PCE and the personal consumption expenditure, PCE data and the core PCE data. Okay, and this is one of this the important economic data that is considered by the Feds heavily. So overall, you can say that all of the coming days, Monday there is nothing as such. Tuesday also we can just out. Wednesday it will be there, Thursday and Friday. So Wednesday, Thursday, Friday. Okay, Wednesday, Thursday, Friday, there will be the volatility, okay, or high volatility. And if you are my Patreon community member, then I will keep you posted, okay, through these daily updates, that what we are expecting, whether a reversal or a fall, okay, what kind of thing is there, and we will rely on technicals no matter what the market is doing. Okay, and because eventually the stock market, the S&P 500 will realign itself to the technicals. Okay, so this thing is clear, fine. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And also you can join my Patreon community in order to get these daily updates, the daily analysis from Monday through Friday. Now the technical movement. Okay, so the technical movement, as of now, the big picture, let me show you again. The big picture is, okay, this is the big picture. Okay, clear. Now this is the short-term picture. Short-term picture says the low of the candle 4216. This was the low of the candle that was formed on 3rd of October. Okay. So in order to come down, in order to see more bearish movement, the S&P 500 must give up, must clear, must breach, must sustain, must close below 4216, and it's all good. Okay, no problem. However, it comes down a little, then it gives a reversal, and it closes above 4216. In that case, okay, it will be subjective. It will be subjective to whether the technicals have saturated or not. Okay, but otherwise it will keep it, okay, at these levels. It might not give any bullish reversal, because the bullish reversal is expected to come only when the technicals will be saturated. As simple as that. There is a condition: if there comes a gap down open, considering the heavy bearish movement on Friday. So Friday was the monthly expiry. Okay, so it was further there, the more fall was there. Okay, options were expiring. If there comes a gap down open, that gap down open is below 4216, then this the gap down open below 4216, it will fulfill the condition. Okay, and that's it, nothing else. In that case, we need to see, okay, the movement in the first hour, how it goes. Okay, and then by the first hour it will be clear whether there are any chances for the survival, or it is simply coming down. As simple as that. One more thing, it is coming down to what? It is coming down to 4155, and not exactly 4155, it is coming down to 4035. Okay, 4155 is where it is going to find some support. Okay, intermittent support. It will give some reversal, and then finally it will come. So it is, see, this is the journey you are seeing. This is this particular journey. This journey is actually towards 4035. Okay, this is the long term picture, and 4155 is just an intermittent support, just to give some reversal, to make some more room for the fall also. Okay, so it will not be that easy that within candle to candle it will come down, hit 4035. No, it will take some break, some reversal, some hold, and then come down. Okay, this kind, so that kind of movement will be there. uh, okay, so I hope this is clear. 4155, okay, it will be there. Now question is that uh, Dow Jones. So as of now, okay, we are seeing that it is the S&P 500 is very close to, okay, this the 4216, 4216. However, in terms of the Dow Jones, okay, it is nowhere close to its previous, these are lows. This means that when the Dow Jones comes down to hit its lows, then by the time the S&P 500 will be trading below 4216, means the S&P 500 has fulfilled the condition for the bearish movement, and it's good to go. Okay, means it's good to fall, not a problem. Okay, now the only constraint will be the reversal. See, now because the S&P 500 is already trading below its 200-day EMA, any reversal will be limited to its 200-day EMA. Okay, in the worst case scenario, 4291. Simple, because now it is trading, okay, well below 4291. It came down, trade below 4291, sustained below 4291, a short squeeze on October 6th, short squeeze. Okay, no, it was manipulation at first. This manipulation triggered the short squeeze that helped the S&P 500 to close above 4291, and that actually triggered the movement, but eventually it realigned. Okay, but now it is below 4291. Fine, that is the barrier. Okay, upper side. uh it's not like that 100% 4291 cannot be breached. Okay, as of now 95% no. Okay, a movement will remain below 4291. There are some only a few exceptional conditions when the 4291 can be breached, okay, during the reversal, otherwise it will not. Now before that, it is a 200-day EMA. Okay, this will hold the any reversal, and when it comes down and it trades below 4216, then 4216 will itself it will become this the resistance level. And not just, see, one more thing guys, you need to understand the concept of the support and resistance. Support and resistance levels are not, okay, these the plain and straightforward levels like 4216 is the resistance. No, the zone around the 4216, that is the resistance zone. So these are the zones, these are not the standalone levels. There's the misconception, everyone, okay, people say. So when I say 4291, it's not actually 4291, it is plus minus 10 points. Okay, as simple as that. And then it creates a heavy resistance. 4291 is the median of the zone. 4216, okay, anyways 4216 is not my calculated support or resistance level. It's just, it was the low of the candle. But let's consider that 4216 is one of these the level. In that case it will be plus minus 5, okay, 5 or 6, that's it. So some very strong levels, okay, we count, okay, up to 10 plus minus 10. For these the normal levels plus minus 5 maximum, okay. So support and resistance are the zones, these are not the levels, okay. And these are the medians of the zones, okay, the numbers. Now reversal is yes. Now because the S&P 500 has formed some kind of zone here, okay, that was from 4216 to 200 day EMA. This means that now there is a good zone, that is from 4216 to 200 day EMA. As long as S&P 500 is trading in this the zone in between 4216 and the 200 day EMA, it can sustain, it can hold for some time, for a day, for 2 days or 4. So, and yes, it is also possible that even though it looks bearish, it might even give a reversal, okay. But again, as long as it is in the zone, it is fine. If it stands if it sustains here, if it spends 1 or 2 days in the zone, then further, okay, the bearish movement will be there, and that will help the S&P 500 to fall, okay. In case of the Dow Jones, there was this a very little, okay, support zone was there, okay, and already the Dow Jones has entered into this the support zone, okay. Let's see how it goes on Monday, okay, whether it is able to find the support, whether it is able to sustain or not. If it is able to sustain, fine, in that case it can give intraday reversals also, but that the reversal will be limited, normal, okay. Now when it comes down, in that case we are talking about the 4155. In between 4216 and 4155 there are other support levels, other very good support levels, okay. So that I will define through these the daily updates, okay. These the strong support levels, and some support levels are created by the moving averages themselves on the lower level charts, okay. So again, these are technicals will create these are levels, okay, and so that will also work. And if you notice, yes, this particular day, Wednesday, okay, 18th of October, I've cleared this thing that 4303. 4303 is the number. If the S&P 500 sustains above 4303, in that case it will not fall, it will not go bearish, okay. The condition to go bearish is that it must give a 4303, it must give a closing below 4303. On Wednesday it hit exactly 4303, there was a reversal, it closed at 4314, okay. Then the next day it came down. So this is the accuracy of the levels that I provide to my Patreon community members, to the point, just plus minus 1 or 2 points, okay, it will deviate, otherwise it will hit these the exact numbers, okay. So between 4216 4155 there are other support levels, okay. These support levels will help the S&P 500 to hold, to sustain, okay. Then a reversal will be limited, normal. Now the reversal, as I mentioned, okay, up to 200 day EMA max, okay. In the worst or the best case scenario, okay, in terms of the bulls, the reversal will be up to the zone of 4291. Fine, it's done, okay. As of now, because it has come down, so it will remain this way. Any changes that we are expecting here, and unexpected changes, okay, that we can see from Wednesday onwards, when the earnings of the giants will be published, posted, and the heavy change we can expect on Thursday when the GDP data will be published, and the extremely heavy change, extremely heavy movement we can expect on Friday when the PCE and the core PCE data will be published, okay. That will be then on Friday. So guys, once again, okay, if you are a long-term player, if you are looking for a sustained growth, and if you do not want to take any risk, then you can participate in this the 30% returns in 1 year, that generally we achieve, okay, in 4 to 6 months, okay. Recently within for 24 hours we have achieved this much, okay. And yes, it comes with an assurance, and also the links are in the description of the video and also in the comment section. Other than that, if you want to learn the technicals, the movement, the trend, the strategies, the hacks with 100% accuracy, manipulation, resistance levels, predictions, okay, to predict by yourself, to self sustain, then you can participate in my stock market knowledge transfer program. And if you're not looking for anything, but you're looking for the daily numbers, the daily movement, the daily trend, and to avoid falling into the traps, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So guys, now the good thing is that the Dow Jones on the weekly chart, it has changed from bullish to bearish. Okay, now only S&P 500, okay, this the crossover in the moving averages is pending, and I think in the coming week, if all goes well, then in the next week itself, okay, we will be able to see a crossover in the moving averages on the weekly chart of the S&P 500. That will further confirm that now the Dow Jones and the S&P 500 both have changed from bulls to bears in the long term. So long term means that it will be there. This is a month, this is October. Okay, so October we can say that a minimum of mid of December. Okay, why I am saying mid of December, otherwise it was supposed to be for next 4 or 5 months, because mid of December, okay, from 15th of December onwards, okay, then most of the people, they will not be trading. Okay, people will spend the money. Okay, there's a Christmas and the New Year, they will go on vacations and all, so the stock market is then free. Okay, free to manipulate. In that case, anyone can do whatever he or she want to do. Okay, no one is going to question, because there is no one in the market to trade. And every year, okay, generally it happens. And then there are some other reasons, the tax loss, okay, this harvesting, okay, that we say, means a lot of other reasons, okay, that generally keep the stock market bullish. But this is not 100% true. If you think that after 15th of December 100% it will move up, it will go bullish, no, 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 not 100%. Most of the time it happens, but not always. Okay, remember this point. And if it fails to give any kind of this the bullish movement, bullish reversal after 15th of December, between 15th of December and the first week of January, okay, in that case, there won't be any more good bullish reversal, and it will remain around 4,000, sorry, not 4,000, but below 4,000. Okay, as of now 3972 is pending for that, this obligation, you can say 3972. Okay, so this is there. So this means that for the next month, and also this month, the earning season will be over. Okay, Microsoft, Amazon, Google are going to post the earnings. Okay, Goldman Sachs has posted, United Health, and these the giants have posted the earnings. Then only Apple will be there. Apple will post its earnings on 2nd of November. 1st of November, the Feds will decide on the rate hikes. 2nd of November, the Apple will post its earnings, and then 2nd of November, okay, this the show is over, and now the movement of the market will be as per technicals, okay, and all. Reversals will be there, some ups and downs will be there, definitely traps will be there, definitely. Okay, against what the people are thinking. So that is why, okay, in order to trade safely, you can join my Patreon community. Okay, so guys, hit like if you have liked this video, and if you have not yet subscribed to my YouTube channel, then you can subscribe to my YouTube channel. And if you want to participate in any of these programs, 30% returns in 1 year, okay, or the S&P 500 knowledge transfer program, okay, or any of my program, then I have given the link in the description of the video and also in the comment section. You can follow these the links. And if you have any questions that you want to ask, then please feel free to ask your question through the comment section. Yeah, so you can simply comment on this video, and I will try to answer your questions. So guys, this was the S&P 500 weekly technical analysis for the coming week, that is from October 23rd, which is Monday, through October 27th, that will be Friday.